Like to introduce?
Thank you, Madam Chair. I have an intern from the KU, and so I hope some of you won't hold that against him. Okay. I've always said there are KU supporters and KU haters, and there's nobody else. They're kind of in between, but he's a political science major. His name is Quinn, and I always say the last name wrong. Schmidt-Gall. Yeah, okay, Schmidt-Gall. Quinn is great, and this is his first day with us.
Welcome to our committee.
Thank you.
Glad you're here. All right. All right. So we will open the meeting today with requests for bill introductions. I think we have a few. Eric, you want to step up?
Thank you, Madam Chair, members of the committee. Eric Turek from the Kansas Department of Insurance. One introduction today, it's RS 0832, and this concerns accreditation standards with the Department of Insurance and the annual date change bill, moving that to a permanent bill, a permanent fix. Thank you.
Thank you. Committee, any objections, any questions? All good? Thank you. Thank you, Eric. Other bill introductions? Come on forward, Kevin.
Madam Chair, I'm Kevin Robertson with the Kansas Dental Association. I'm here to request RS 0707. That is a bill that would create a medical loss ratio for dental insurance plans, or a dental loss ratio. It would create the calculation for that DLR, give the Commissioner of Insurance oversight authority, and then have reporting and transparency requirements as well.
Thank you. Committee, any questions? Any objections? Certainly, Senator Haley.
So a dental loss ratio or medical loss ratio is a calculation that puts in statute what percent of a insurance premium goes to patient care versus administrative for that insurance carrier.
Motorist coverage liability offset?
Yes. Eileen?
Thank you, Madam Chair. I'm under the impression this is a House bill, not a Senate bill. That was being requested by a House member, and so I don't have an RS number for the Senate.
I apologize. This was given to me by a colleague of mine, so I'm not aware of that.
Okay,
So we will need a Senate RS number.
somebody from the Senate to request that.
Or someone to request it. So
Okay,
sorry.
I apologize for that. I will double check with my colleague. He passed it off. He was out of town today, so.
Thank you. Thank you so much.
I do apologize.
Right, very good. That's okay. Any other bill introductions? Yes, come forward.
Chairman Dietrich and members of the committee, Brock Rayler, General Counsel, Office of State Bank Commissioner. I request this committee introduce RS 0528, which is a bill to amend the state banking code and repeals 16842.
Thank you. Committee, do you have any questions? Any objections? If not, thank you. We'll get that entered. Are there any other bill introductions? We've got 20 more minutes. Are you sure? Oh, sorry, Eileen. Very good. Thank you so much. All right. Committee, we will now, if you look at our agenda, we're going to have a hearing on Senate Bill 21. So at this time, I will open the hearing on Senate Bill 21. Eileen, would you be kind enough to explain the bill to us, please?
Thank you, Madam Chair, members of the committee. Senate Bill 21 requires that third-party administrators maintain separate fiduciary accounts for individual payers and not contain funds collected or held on behalf of multiple payers, and it requires third-party administrators disclose to the commissioner any bankruptcy petition filed by or on behalf of the administrator pursuant to Chapter 9 or Chapter 11 of the Bankruptcy Code. As I said, Section 1 of the bill amends KSA 40-3807 pertaining to collection of premiums and payments of claims by third-party administrators. The bill would amend the statute to require that an administrator maintain a separate fiduciary account for each payer and that there be no commingling of funds between each payer and other funds held by or collected on behalf of other payers. Section 2 amends KSA 40-3809 pertaining to notices and disclosures required to be made by administrators. And as I said, the bill would amend the statute to require that an administrator immediately disclose to the commissioner any bankruptcy petition filed by the administrator or on behalf of the administrator pursuant to Chapter 11 or Chapter 9 of the Bankruptcy Code. And I can stand for questions.
Committee, do you have any questions of our revisor? Thank you, Eileen. Appreciate that. So we have proponent testimony from Eric Turek from the Kansas Department of Insurance. Eric, welcome.
Thank you, Madam Chair. Members of the committee, Eric Turek, again from the Kansas Department of Insurance, pleased to speak in support of Senate Bill 21, and this concerns third-party administrators. The department does license about 400 third-party administrators. Most of them are out of state, but if they still have to be licensed if they want to do business here. And this bill stems from a bankruptcy that happened with a home state TPA last year, located in the Great Bend area, that had multiple clients who were out of state. And just a quick review, third-party administrators are the intermediary between healthcare providers, the policyholder, and the insurance company. And so there was a bankruptcy that was filed, and the department was not aware of the filing until actually another insurance commissioner had notified the department, because some of their insurance companies who were working with this TPA were having issues. And we did not find out until after the doors were shut. Everybody had been fired from the TPA, and so we really weren't able to step in. And ultimately, if we knew at the time of the filing of the bankruptcy, we may have been able to assist with the process of ensuring that the funds from the clients were able to get back to the clients in an expeditious manner. The bankruptcy litigation is already concluded, but the funds we found were completely commingled, and because of our delay because we weren't notified, the funds were commingled, and the property, the computers and whatnot had already been sold off, whatever it may be. We really weren't able to ascertain which funds belong to which clients. And so ultimately, this is our solution here, to ensure that the TPAs hold separate fiduciary accounts per client, and ultimately that they let us know as soon as the bankruptcy files are made.
Thank you, Eric. Committee questions? Senator Fagg?
Thank you, Madam Chairman. Eric, thank you for your presentation. The bankruptcy part, I'm sitting here thinking that before, it seemed like we would need to do something before them, because once the bankruptcy hits, it hits. And you're thinking that if you get notified immediately, which you do from the bankruptcy court, you don't get notified, the client, does the person filing the bankruptcy, you don't get any filing from the court system at all on that?
Madam Chair, I'm not aware that we were notified in any manner formally until after until that process had started.
Okay, and kind of follow up, so was the people that had the money coming to them, they were notified? Did any of those people notify you that way?
I'm not aware that the individual clients reached out to us. They may have. I do know that we were notified by another insurance department who they notified us, and that's how we were made aware of this.
And I'll follow up with that one, if I may, Madam Chair. Kind of learning something here on this one. So when the filing happened and you're notified, in that example you gave us, would you save some money in that? Or, you know, there's a pecking order, who gets what money? And I don't know where we would be in line for that. So I'm just wondering if that would have really helped if you'd have been notified in time, as an example.
Sure. I think, well, and the department itself wouldn't have received anything. It's specifically each individual client. I think that they would have gotten their funds that they had deposited with the TPA faster. In addition, because the funds were commingled and because the computers weren't accessible or the infrastructure had been sold off, whatever the case that may have been, ultimately, if we knew beforehand, we would have been able to ensure that the funds would have been dispersed appropriately earlier. I'll say this too, that the department requires annual reports from TPAs to ensure positive equity. This particular TPA, its parent holding company had gone bankrupt as well, and so this is really a one-off case, but we ultimately want to ensure that this just doesn't happen again.
Thank you. Senator Warren, question?
Yes, thank you, Madam Chair. Appreciate it. Thanks, Eric, for your presentation on the bill. So I'm looking on page 2 at line 37, and we're talking about an administrator shall immediately disclose to the commissioner any bankruptcy petition filed. Immediately is a bit vague. I mean, is it 3 days? Is it 7 business days, 10 days? So if you're trying to, I guess, create a mandate, maybe some more specificity would be helpful for the department.
Madam Chair, I would look to the reviser. I don't think that we would have an issue. I mean, our intent is to ensure that we are notified as soon as possible. So if there's a remedy or something that the committee would be interested, we would find that.
And we can talk offline about that, but just it's helpful for those who are trying to comply to know probably what the deadline is. So thank you, Madam Chair.
That's probably a very good question. If we're going to put that in statute, what would be a reasonable amount of time to define immediately? So we'll think about that. We'll talk about that. Senator Gossage.
Thank you for being here, Eric. So what I know of third-party administrators or TPAs, they function as an insurance company, and so they process the claims. They make arrangements with the reinsurer. They determine the aggregate spec and specification amounts for premiums as to how much should be taken out. So they work with employers that have decided that they want to do some self-funding or partial self-funding. And so I think my colleague brought up something about a bank, but this is actually not a bank. This is a third-party administrator who is handling all of these claims administration. And so an employer will send, so we think of an insurance company, but they're functioning like that, but yet all the claims would go to be processed through them. But yet the individual that works for the employer, the employee would have a card, and it might say Blue Cross, or it might say, Humana, but in reality, it's the third-party administrator that's doing this. So should they go bankrupt, I can understand why they're saying, we need to know what's going on, because they've been keeping and holding these funds, paying out claims, but there's also, you have the claims fund that's supposed to pay in case somebody has a claim at a doctor's office or a bank or at a hospital. But if these funds have been taken or they've gone bankrupt, that's why you would need to know right away. So that makes sense to me, and I agree with Senator Warren. Immediate probably needs to have a definition, but other than that, I fully support this.
Thank you. Committee, any other questions? Very good. Great conversation, and we'll think about that word immediately. At this point, I see no neutral testimony. I see no opponents. So we will close the hearing on Senate Bill 21. Thank you all. Next, we will open the hearing on Senate Bill 23. Eileen, would you like to give us a briefing on Senate Bill 23?
Every time I speak after Eric, I realize just how darn tall he is. Thank you, Madam Chair, members of the committee. Senate Bill 23 would require agents and insurers to respond to inquiries from the Commissioner of Insurance within 14 calendar days, and it would authorize certain rebate pilot programs to exceed 1 year in duration. Senate Bill 23 amends KSA 40-2404, which is the statute relating to unfair methods of competition or unfair and deceptive acts and practices. The bill amends the statute in 2 ways. First, under current law, an insurer may offer a value-added product or service to their customers if the insurer can satisfy 2 criteria. First, the product or service must relate to the insurance coverage being provided. And second, the product or service be primarily designed to provide one of a list of items that I've provided in the brief. First, loss mitigation or loss control. B, reduce claims cost or claim settlement cost. C, provide education about liability risks or risk of loss. D, it could monitor or assess risks, identify sources of risk, or develop strategies for eliminating or reducing risk. E, it could enhance health. F, it could enhance financial wellness through education or through financial planning services. G, it could provide post-loss services. Or H, it could incentivize behavioral changes to improve the health or reduce the risk of death to a customer, death or disability to a customer. The availability of these value-added products or services is required to be based on objective criteria and offered in a manner that is not unfairly discriminatory. If the insurer or producer does not have sufficient evidence but has a good faith belief that the product or service meets those criteria that I described, then the insurer or producer can offer those services or products through a pilot or testing program. Under current law, that program cannot exceed 1 year. What the bill would do would allow the insurer or producer to extend that 1 year pilot program for any additional time needed in order to determine if the product or service will satisfy those criteria or not. Second, Senate Bill 23 would make it an unfair method of competition or an unfair or deceptive trade act or practice by making it an unfair claim settlement practice for an insurer to fail to respond to an inquiry from the insurance department concerning a complaint or inquiry related to a particular matter within 14 calendar days of the receipt of the inquiry, and to furnish the department with an adequate response to the inquiry. Further, the bill amends KSA 40-4909, which is the Uniform Insurance Agents Licensing Act, and adds that failure of an insurer to respond to an inquiry from the department, as I just described, to the list of reasons or actions that the commission of which could lead to the commissioner to deny, revoke, suspend, or refuse to renew an applicant's license or, an applicant's application for licensure or the license itself. And speech impediments notwithstanding, Madam Chair, I can stand for questions.
Thank you, Eileen. Questions? Senator Gossage?
Thank you, Eileen. It looks like there have been some subheadings added.
It's just for readability.
I assume so.
No new language that's being
Thought
provided.
that was an Eileen idea. Those are usually really good, especially if you've got a longer bill and you're trying to sort through.
What the office is tasked with doing is anytime we amend a statute, we go through the entire statute, bring it up to current drafting standards, fix any unclear language.
To that,
and
commas. Yep.
do the grammatical and the which that changes, witch hunts, as I call them. We do all that. It makes the bill look a little more drastic than it really probably is.
Thank you.
Yes. Senator Rose?
Thank you, Madam Chair. What insurance product lines is this pertaining to?
I believe it would pertain to any, but that might be a question for the conferee rather than me as the reviser.
Any other questions of the reviser committee? Thank you, Eileen. We have proponent testimony from Eric Turek. Would you like to step up, Eric? And probably have some questions for you. Welcome.
Yes, thank you, Madam Chair. Members of the committee, Eric Turek, once again from the Kansas Department of Insurance. I'll speak to the value-added services portion of and products portion of the bill, that technical change, and then I will speak to the 14 calendar day response requirement from the insurance companies. So a value-added service, and I'll look particularly to the agents on the committee, you are aware that there are certain additions to a sale of an insurance policy that cannot be given to a consumer, and those would include I'll step back a little bit. What can be included are items that the revisor went over, items or benefits or products or services that enhance health, educate the consumer, mitigate loss, offer post-loss services, et cetera. They're very clear in this statute. And if sometimes to insurance companies, it's not always apparent that their value-added services or products do not qualify per that criteria. And so in that case, a company can enter into a test pilot program with the department. And it's a year-long program where the company can determine whether or not there is evidence that these criteria on at the bottom of page 5, that they are met. It has been communicated to us that sometimes 365 days is not necessarily a sufficient amount of time to determine that these criteria are met. And to the question about which line of insurance this primarily applies to, I think that more broadly, value-added services and products applies to all lines generally. A smoke detector, for example, or some kind of flood monitor on the P&C side, but more on the test pilot. If I could speak to the test pilot, there might be some wellness wellness program benefits that are associated with the policy where it might not be immediately recognizable that they mitigate loss and enhance health and education. So, and I'd be happy to clarify further if I need to. So that's just allowing companies to request an extension if they need more than 365 days. The second aspect of this bill, and this is really the crux of the bill, and as you heard the commissioner, was that last week? And for the past 6 years, as she's appeared before this committee, she does pride the department on our consumer complaints, or our consumer assistance, and the complaints that we receive from consumers concerning insurance issues broadly. Last year, we received and processed 3,600 consumer complaints, and that doesn't include the inquiries that we receive, what's the difference between Medicare Part A and B, and things like that. Currently, insurance companies have 15 business days to reply to the department broadly on any communication, and that applies also to the consumer complaints. And ultimately, 15 business days translates into 3 weeks or 21 calendar days. We are hoping to move the requirement for the insurance companies to respond to the department concerning consumer complaints to 14 calendar days. All other communication would remain the same, that deadline to respond. The 15 business day threshold, that dates back to 1981, an NAIC model regulation, and we've kept that in place for almost 50 years. And that also applies to insurance agents too, 15 business days to respond to the department. For consumer complaints, we know that there have been technological advancements since 1981, and we no longer communicate with the insurance companies concerning consumer complaints by mail anymore. We don't even communicate to them on consumer complaints to a general inbox. We at the department have engaged in a pilot program with state-based systems and the NAIC to ensure that, or to create a portal for companies and the department to upload documents to a portal rather than sending documents and correspondence to an email when investigating and processing consumer complaints. So we really find 14 calendar days, again, specifically just to the consumer complaints process. We find this a good balance between the needs of the consumer and the needs of the insurance companies and agents. I'd be happy to stand for questions.
Thank you. Thank you. That was a great presentation, answered a lot of questions. Committee, other questions for Eric? Yes, Senator Gossage and Senator Fack.
Thank you, Eric. So just for clarification, I thought that I read that this is for not only the insurer, but also an agent of the insurer who is acting on behalf of the insurer. It says failure to respond to an inquiry, and then it says upon receipt. So how are those sent out? You talked about use SBS. et cetera. Sometime, I know years ago, I thank God, have in my 20 years, never had any of that that came to me. But I do know a couple of agents that did. And their concern was, yes, they received something in the mail, but by the time they got it, they had like 3 days. So how is that sent out? You said we're not using the mail anymore.
Yeah, sure. Thanks. Thank you, Madam Chair. I'm not aware, I think that 99% of the correspondence we send out is done digitally. And that includes our consumer complaint process. The portal that I spoke to, that's currently just between that's the external company complaint portal. I believe that once the company portal aspect has been refined and it's used by more states, an agent portal would be incorporated into that process. So currently, the agent aspect is not there for the portal, but we still do communicate with agents. Our complaints involve agents about 10% of the time, 10% of our complaints. But so in that.
Sorry, Eric, go
Well,
ahead.
and I was just going to say, so in the case of your colleague or your friend, whoever that may be, where they may have gotten correspondence from the commissioner in the mail and then they had 3 days to respond, I think that was during the days of snail mail where we used snail mail. But upon receipt would be after we send the email.
And one could not determine, even an insurance carrier, upon when they received it unless it were digitally, like we sent you an email on this day at this time, so therefore you did receive it. I have no problem with the 14 days. I think that makes sense. Thank you.
Thank you, Senator Gossage. I think that was also the days of fax. And you always had evidence of when you received it because you had a date on and time on your fax. So I don't know anybody that uses fax machines anymore. But, right, yeah, absolutely. Thank you. Senator Fack.
Thank you, Madam Chairman. Thank you, Mr. Turek, for your presentation. My question's kind of in the testing period. So they request the insurance commissioner to extend the testing period of a certain rebate pilot programs beyond a year. So that this request comes in, is there any kind of time limit on the backside of that 1 year? You know, once they come in and request that, what happens when they come in? Is there, we'll give you another 90 days or another year, or how does that part of it work?
Madam Chair, I'm looking at page 6 at the bottom. The insurer or producer may request that such pilot or testing program may be extended for such additional time as necessary to determine if it meets the criteria. I think that the department would yield the discretion whether to grant the additional extension if the department determines that that's necessary or valid.
So at that point, Eric, you decide whether it's a 90-day deal or 6 months or 2 years. It's kind of your discretion on how long to set that up for. Thank you.
Committee, any other questions? Oh, I'm sorry, Senator Francisco, I didn't turn around.
Thank you, Madam Chair. And I started with the same question that Senator Fagg had about that. So I understand that it says that the insurer or producer may request that such pilot or testing period may be extended. Would it be better to say that the insurance commission may grant additional time beyond that? Because anybody can request whatever they want to request. And we certainly want to be clear that the insurance commissioner can extend that. I don't know if that date is limited anywhere else.
Thank you, Madam Chair. I think that only that immediate previous subsect or paragraph applies to the pilot program. If the legislature would like to clarify that the commissioner retains the discretion to approve these, I don't think that we would find that problematic.
Committee, any other questions? All right, very good. We do have neutral testimony in our folder. You'll see from the Kansas Association of Property and Casualty Insurance Companies, who have worked on and agreed pretty much to the time frame, condensing that a little bit from the 15 business days to the 14 calendar days. Appreciate that. So they're neutral. I don't see any opponent testimony. So at this point in time, we will close the hearing on Senate Bill 23. Committee, that is our work for today. Our next meeting is going to be Wednesday, January 29th. Oh, Kansas Day. Just a reminder, there's a lot going on tomorrow. We will be hearing Bills 22 and 27. Thursday, we're going to have an informational presentation and a bill hearing. And then next week, I just want to forewarn you, we are scheduled to meet on Monday, and we are having hearings every day, and we'll start working bills. So Monday through Thursday next week. Our time is winding down. And so we're taking our last day that you can meet as a committee and working back to make sure that we are getting through the bills that we want to have hearings on. So thank you so much. Committee adjourned.